Morning, Steve Free in Chicago with the morning grain comment. Well, I think the focus in part of the Midwest is the fact that we're going into a deep freeze across much of the Midwest. First cold temperatures of this winter, and then next week it's even going to get colder. So really it doesn't have an impact on price, but definitely could have some impact on logistics and animal feeding and things of that nature. So bundle up. As far as overnight, prices are a little bit lower. We saw some rejection yesterday after the funds were good buyers early in the session on some concern about Argentina weather and some good export demand. I think this might be some evening up in front of the USDA's Friday supply and demand report. They're not going to give us anything bullish. The question is, are they going to give us anything bearish? We have been noting that open interest has been going up in the beans, down in corn and wheat. We are hearing that the index funds are beginning to take some of their money and start looking back and maybe coming back to the commodity market. So we'll see if that has any impact. Again, beans down about 3 cents. Nearby is at 10.54. We rejected the 10.70 area. That seems to be now resistance unless there's a South American weather issue. March corn down also 2 cents at around 3.58. We went up all the way to 3.64. Again, probably won't push over that unless there's a South American weather issue. And wheat continues to be struggling on price standpoint, now at 4.04, and we couldn't even get up into some of the moving average, simple moving averages at around 4.17 on the March. Chinese ag futures, we've got beans up, corn down, soybean meal up, soybean oil up, but we did see some profit taken in the Malaysian palm oil, and we had one international bank come out and say, you know, we've seen a rally in oil seeds, but they feel that that will end in the spring once we see the end of El Nino, once we see normal rains in the Malaysian palm oil area, and they are forecasting for 2017 a record world soybean crop. As far as funds yesterday, they bought beans, meal, oil, and corn, sold some wheat, and we did see where there was one group that came out and asked 10 analysts if they were bullish or bearish corn and beans and what they would do as far as farmer marketing is concerned. And you know, you get the same old story. You know, prices are going to go down if it rains, and it's going to go up if it doesn't rain. But we did see one person say, let's look at buying September corn calls, November soybean calls, maybe take a little bit of a risk in selling some out of the money puts, but that's a very high risk trade. I wouldn't recommend that. But at the same time, by being long those calls, it gives you the advantage of being more aggressive selling cash as the market moves up. We did see farmers yesterday selling corn, old crop corn on yesterday's rally, and they've been aggressive sellers on beans. So basically what you're trying to do is maybe in the beans, a better idea might be buying some puts. That protects you, offers you a floor, and keeps your cash position open. We also note that in corn, prices are pretty low, so buying puts may not be that good of a thing, but you know, you get closer to 370 in the nearby market, maybe $4 in the 17Ds corn, sell some cash and replace it with an out-of-money call. You can also use short-dated calls, whether it's the May or July short-dated calls. They follow the D's corn and November soybean futures, but they're paying less time premium. They expire earlier, but at least it gives you a window for the South American crops if there's a problem down there and you've already sold some cash. So again, 2017 is about surviving, about protecting your risk, about base hits, not home runs. And as always, it's up to the weatherman to decide where prices go, and we have no control over that. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.